Hey, what's happening, guys? Dan Dario here with another Options and Play video update. Hope everybody had a great weekend, enjoyed the Super Bowl. We are starting off the week with kind of a lackluster day. Whether people are just tired from yesterday or maybe exhausted with all the headlines, which we've had plenty. It definitely has not been as busy of a day. However, we are coming off a very busy week and a really important week. Okay, so I mentioned this in yesterday's note, and I wanted to walk through it on the chart that last week was important, very important technically. Okay, there was a lot going on. The earnings we're still in the earnings season. There were some big earnings. They had the big CPI reading on Thursday, right? And then on Friday we had another round of headlines out of Russia and the Ukraine concerning the Ukraine, which caused a slide Friday into the close. Right now, what throughout all of that, really, the big takeaway for me, and this is really the most important thing, is that you have now had two tests and two failures for the Qs to reclaim the 200-day, right? So this is the orange line. This is the 200-day moving average. That is twice now that it's gotten to the 200-day and been rejected at it. It's been unable to really reset, and that to me is near-term negative. Okay, when you have a level of that importance starting to turn into resistance, that that really starts to weigh on sentiment. I mean, people that really use technicals will start to see, they say, the longer you spend underneath the 200 day, the worse the action tends to get, right? Momentum starts to build more to the downside. And now you've had two tests of the 200 day and two failures. And then, I mean, last week you got the CPI, which started the pullback, and then the headlines out of Russia and Ukraine, which really accelerated the pullback, right? So you have headline risk, and now you have technical risk too, right? Because you have what is a really key moving average turning into resistance, combined with headline risk, and it's setting up um, either a stretch of volatility or even a stretch of weak price action. And I mean, underneath, there's really not a whole lot of reference points, right? You have the January low, which is a very obvious target because we never got back to retest that. And then if we really continue to accelerate below that, and I'm not sure that we will, but if we do, then the May low is going to be your next real focus level, and that's down around the mid-teens, maybe 320 area, right? So the SPY, it's definitely similar, not exactly the same. What was interesting about the spider is it's below the 200-day, but its projection came at the 100-day. So see, back-to-back moves into the 100-day, back-to-back failures at the 100-day, and for the spider is very clear. The 100-day has been a significant uptrend support level, right? So I keep scrolling back. So bounce at the 100-day, bounced at the 100-day, bounced, then it bounced at the 100-day three separate times, starting in December, right? So December bounce, later December bounce, January bounce, and then it broke. So you basically have a 15 to 16 month support level, right? Which is now starting to turn into resistance, right? So you bounce, fail, and now it's below the 200-day as well. So the Qs, I focus more on tech, so I pay a lot more attention to the Qs, but you can see too that the spiders are kind of a similar setup, and they're also below 200 days. So these are definitely moves that make you really take notice, right? So whether that's being more cautious, trading with less size, tighter stops, tighter targets, right? Even two-way, focus more on two-way trades. So if you're strictly bull, maybe it's time to start thinking about on the bear side too, because the Qs are below the 200-day, the spiders are below the 200-day, and to be honest, there's really not great price action, and then it might mean that more downside is coming. So it's just these things combining are telling me that we're definitely not out of the woods. and there might be a retest of that January low coming in the not too distant future. All right. Remains to be seen. The thing with headlines is that, if we're moving on headlines, headlines can swing both ways, right? So negative headlines one week and maybe things reverse. Headlines are better the next week. So it's hard to say, but technicals are to me are starting to indicate lower. All right. So if you like this video and you're looking for more information about swing trading with options, please follow up with the link in the description of the video for more information on options and play. Have a great night. Stay well, and I will talk to you